Hey everyone, and welcome back to the channel. Imagine this. You wake up one morning, grab your phone and check your portfolio. Gold, down. Silver, crashing even harder. And you're probably sitting there thinking, wait a minute. Wasn't gold supposed to be the ultimate safe investment? The thing that goes up when everything else is falling apart? Well, my friend, if that sounds familiar, then welcome to one of the most head-scratching moments in recent financial history. Because right now, as I'm recording this, something absolutely wild is happening in the precious metals market. We're not just talking about a little dip here. These are moves that haven't been seen in years. It is making everyone from billionaire investors to your uncle who bought gold coins at a gun show equally nervous. You see headlines screaming about a collapse or a crash, and it's natural to feel a bit rattled, especially if you've put your hard-earned money into these assets expecting stability. But here's the thing that nobody seems to be talking about. This crash, it might not be what you think it is. In fact, there are three very specific reasons why gold and silver just took such a significant nosedive. And trust me, one of these reasons is so incredibly counterintuitive, it's going to completely blow your mind. We're going to peel back the layers of this mystery today. So buckle up, because by the end of this video, you are going to understand exactly what's truly happening behind the scenes. Why these market shifts matter to you, even if you do and own a single ounce of precious metals. And crucially, whether the title of this video is actually telling you the full truth. Should you really be selling your gold and silver right now, or is something much bigger and more complex going on that could present an incredible opportunity? Let's dive deep and uncover the real story together. What if I told you the financial world just saw gravity reverse? That's what it feels like when gold and silver, the ultimate safe havens for thousands of years, suddenly fall off a cliff. What's going on? Is this the end of precious metals as we know them? Stick with me, because in the next 10 minutes, I'm going to break down the three massive forces that created this perfect storm and what it means for your money. Before we dive in, let's get one thing straight. For millennia, from ancient Egypt to the fall of Rome, gold has been the ultimate store of value. When empires collapsed and currencies became worthless, gold endured. Remember the 2008 financial crisis? What did everyone rush to buy? Gold. And silver, its trusty sidekick, has always been right there, a hedge against chaos and inflation. So when these metals take a nosedive, it's not just another blip on the chart. It's a major event that demands a real explanation. You've probably heard all the theories. It's the Fed. It's a big bank conspiracy. And while there might be a grain of truth there, they're all missing the bigger picture. What we're witnessing is the collision of three powerful economic dominoes that all fell at once. Let's break down the first one. Alright, reason number one, and this is a big one. The US dollar just went into absolute beast mode. Now, you might be wondering, what does the dollar have to do with my gold coins? Well, everything. Gold and the dollar have what's called an inverse relationship. Think of it like a financial seesaw. When one goes up, the other usually goes down. Here's why. Gold is priced in dollars. So, when the dollar gets stronger, it takes fewer of them to buy the same ounce of gold. Simple math, right? But it's also about psychology. A strong dollar is like a fortress. When investors feel safe holding cash, they don't feel the urgent need to run to gold for protection. The dollar asterisk becomes asterisk the safe haven. So why is the dollar suddenly flexing its muscles? The Federal Reserve. They've been aggressively hiking interest rates, making it more expensive to borrow money but incredibly attractive to hold dollars. Higher rates mean you get paid more just for holding dollar-based assets. Now here's the kicker. While the US was doing this, other major economies like Europe, Japan, and China were facing their own problems: energy crises, economic stagnation, and a massive real estate bubble. Suddenly, the dollar wasn't just strong. It was the only strong player left on the field. It's like being the only adult in a room full of toddlers. You win by default. And when global investors stampede into the dollar, they have to sell something to get those dollars. And what's liquid and easy to sell? You guessed it, gold and silver. Okay, on to reason number two, and this one might surprise you. Remember the chaos of 2021 and 2022? When inflation was running hotter than a volcano and your grocery bill was giving you a heart attack. During that time, people were panic buying precious metals like it was the end of the world. And for good reason. Gold is the classic hedge against inflation. When your paper money is losing value, hard assets are supposed to protect your wealth. But here's the twist. Inflation has started to cool down. Now it's not gone. We're not back to the good old days. But we're not staring down the barrel of 9% inflation anymore, either. The monster has shrunk. And this changes the entire game. When people are less worried about future inflation, the urgency to own gold disappears. They start thinking, hey, maybe I can move this money from a shiny metal that doesn't pay me anything into something that generates a return. It's a logical shift. There's also a fascinating psychological angle here. Markets don't just trade on what's happening now. They trade on what they think will happen next. And right now, the collective belief, or the market consensus, is that the worst of inflation is behind us. Is that consensus right? Honestly, only time will tell. But in the short term, perception is reality. If enough people believe inflation is beaten, they act on that belief. They sell their inflation hedges. And that means selling gold and silver. Here's a little secret the financial news often misses. Gold doesn't actually perform best during high inflation. It performs best in the anticipation of it. It's a forward-looking indicator. Once inflation is here and everyone expects it, the fear is already priced in and gold often stalls or even drops. So what we're seeing might not be gold failing. It might just be gold doing exactly what it is supposed to do, adjusting to a new economic reality. Now for our third and final domino. This one is all about technology and a fundamental shift in investor behavior. We're talking about the rise of a new kid on the block that is competing for the title of digital gold. I'm talking about Bitcoin and the broader crypto market. For decades, if you were a young tech-savvy investor looking for an alternative to stocks and bonds, your choices were limited. You'd probably end up buying some gold or silver. But today there's another option, and it's one that many in the younger generation find far more exciting and accessible. Think about it. You can buy a fraction of a Bitcoin on your phone in seconds. It's digital, it's decentralized, and for many it represents the future of finance. Now, I'm not here to debate whether Bitcoin is better than gold. That's a whole other video. The point is, it's a competitor. Money that might have flowed into precious metals as a hedge is now being split. A portion of that safe haven capital is being diverted into cryptocurrencies. So gold and silver aren't just competing with a strong dollar and falling inflation fears. They're also competing with a brand new asset class for investor attention and dollars. This creates a triple threat. You have the dollar pulling money away, calming inflation, making gold seem less necessary, and crypto offering a new, exciting alternative. When you see it this way, the recent drop in gold and silver prices starts to make a lot more sense. It wasn't one thing. It was the convergence of these three powerful forces all at once. So where do we go from here? Is this the end for precious metals? I wouldn't be so sure. Remember, the dollar's strength won't last forever. Inflation could come roaring back, and the crypto market is still incredibly volatile. The fundamental reasons for owning gold and silver as insurance against financial chaos and currency devaluation haven't gone away. They're just taking a back seat for now. What we've just seen is a perfect storm, but storms pass. The key is to understand the weather patterns so you're not caught by surprise. Alright, let's dive into reason number 3, because this is where things get really fascinating. It involves the world's second largest economy doing something that sends shockwaves through every commodity market on the planet. China has stopped buying. Now, let me explain why this is such a massive deal. For the last few years, China has been on an absolute gold buying spree. We're talking about the People's Bank of China adding hundreds of tons of gold to its reserves, month after month, like clockwork. This consistent buying was a huge pillar supporting gold prices globally. So why were they buying so much? Well, analysts have a few theories. Some think China wants to reduce its dependence on the US dollar. Others believe they're paving the way for the yuan to become a global reserve currency backed by hard assets. And some just see it as a smart hedge against global economic uncertainty. Whatever the reason, they were buying. And when a country with the second biggest economy starts hoarding something, the price of that thing tends to go up. It's basic supply and demand. But recently, the music stopped. The buying slowed down, then it came to a complete halt. And now there are even whispers unconfirmed. Mind you that China might actually be selling some of its gold reserves. Why the sudden U-turn? This is where we get into a bit of speculation, but the theories are compelling. First off, China's economy is hitting some serious turbulence. Their real estate sector, which is a massive part of their GDP, is in deep trouble. Major developers are defaulting, and people who invested in properties are left empty-handed. It's a mess. To stabilize things, China might need liquid assets like US dollars, and to get those dollars they might need to sell some gold. Second, there's the geopolitical angle. If China believes global tensions are easing, or if they've calculated that holding dollars is more strategically valuable than gold right now, that would explain the shift. And third, this is the really interesting part, China might be playing the long game. By selling gold now when prices are relatively high, they could be planning to buy it all back later at a much lower price. It's the ultimate buy low, sell high strategy, but on a massive nation-state scale. Regardless of the exact reason, the impact is undeniable. When one of the world's biggest buyers leaves the market, prices fall. It's that simple. And that can be devastating if you're holding precious metals. So let's zoom out for a second and talk about what this means for you. Because unless you're managing a central bank, you probably don't think about gold and silver prices every day. But here's the thing, precious metals are connected to everything in the financial world. They're like the canary in the coal mine for bigger economic trends. When gold crashes, it tells us something about market confidence. It suggests that people feel more secure in traditional financial systems, and that fear is subsiding, at least for the moment. But this is but it could also be telling us that we're in a moment of complacency. Maybe everyone is so focused on the short-term good news, like cooling inflation and a strong dollar, that they're ignoring the bigger risks lurking on the horizon. Because let's be real, the global economy is still walking a tightrope. We have massive debt levels in almost every major economy. We have geopolitical tensions that could flare up at any moment. We have climate change causing economic disruptions and technological change happening at a dizzying pace. In that context, is it really smart to abandon traditional safe havens like gold and silver? Or are we setting ourselves up for a painful lesson when the next crisis inevitably hits? Okay, so here's where we get a little controversial. The title of this video says, 3 reasons you need to sell now. But what if, just hear me out, what if the exact opposite is true? There's an old investing maxim from Warren Buffett, be fearful when others are greedy, and greedy when others are fearful. This has proven true time and time again throughout history. Right now, sentiment around precious metals is pretty negative. People are selling, prices are dropping, and fear is in the air. And you know what that often means? It often means we're getting close to a bottom. Think about it. All 3 of the reasons we just discussed, the strong dollar, cooling inflation, and China's reduced buying, these are all temporary conditions. They aren't permanent structural changes to the global economy. The dollar won't stay this strong forever. Eventually, the Fed will cut interest rates, other economies will stabilize, and when that happens, the dollar will weaken, making gold more attractive again. Inflation might be cooling now, but does anyone really believe we'll never see high inflation again? With all the money that's been printed in recent years, aging populations creating fiscal pressure, and climate change causing supply shocks? Come on, inflation will be back. Maybe not next month, but it'll be back. And China? They're not going to abandon gold forever. They're playing a strategic game. And when they start buying again, and believe me, prices are going to shoot right back up. So, from a contrarian perspective, this crash might actually be creating a once-in-a-decade buying opportunity. It's the classic buy when there's blood in the streets scenario. Now, I'm not a financial advisor, and this isn't financial advice. You absolutely need to do your own research and make your own decisions. But what I'm saying is that the smartest investors don't just follow the crowd. They anticipate where the crowd is going next. For those of you who like to look at technical analysis, let's break down what the charts are telling us. Gold recently broke through some major support levels, price points that had held firm for months, even years. When those levels break, it often triggers a cascade of selling as automated trading systems and stop-loss orders kick in. This is called technical selling, and it can create dramatic price moves that have very little to do with underlying fundamentals. It's pure market mechanics. Silver has been even more volatile, which isn't surprising. It has a smaller market than gold, which means it swings much harder in both directions. When gold moves down 5%, silver can easily drop 10 or 15%. It's leverage, baby. It cuts both ways. But here's the interesting part. Many technical analysts are now looking at these charts and seeing what's called a capitulation pattern. That's when the weak hands panic sell, driving prices down to levels that are actually below fair value. And capitulations are often followed by sharp, powerful reversals. So the charts are actually sending mixed signals right now. Short term, they look pretty bearish, but long term, they might be setting up for a major rebound. This complexity is what makes investing so challenging, but also so rewarding. Alright, so let's bring this all home. We've just covered 3 major reasons why gold and silver took a significant dive. First up, the dollar got incredibly strong, and that makes precious metals, which are priced in dollars, look less attractive to international buyers. Then, inflation cooled down, which reduced that fear factor, the one that often sends people running to safe havens like gold. And finally, China, one of the world's biggest buyers, actually stepped back from the market. Each of those reasons, significant on its own. Put them all together, they created what you might call a perfect storm, sending prices plummeting. But here's the real question, the one that truly matters. Should you actually sell your gold and silver right now? Honestly? The answer depends entirely on why you own them in the first place. If you bought gold and silver as a short-term trade, hoping to flip them for some quick profits, then yeah, you're probably feeling some pain right now. And in that specific scenario, cutting your losses and moving on might be a legitimate strategy for you. There's no shame in managing a short-term play. But, and this is a big but, if you bought them as insurance, as a hedge against those worst-case scenarios, as a long-term store of value, then selling right now might just be the worst thing you could do. Think about it. You'd be selling at exactly the moment when fear is at its lowest and complacency is at its highest. You'd essentially be canceling your insurance right before the accident, so to speak. The truth is, gold and silver aren't really investments in the traditional sense. They don't pay dividends, they don't generate cash flow. They just sit there. Being shiny, what they asterisk is financial insurance. And you would uncancel your car or home insurance policy just because you haven't had an accident recently, would you? Now, does this mean you should go all in on precious metals? Absolutely not. Diversification is still king, always. A well-balanced portfolio should ideally include a mix of stocks, bonds, real estate, and yes, maybe some precious metals. But the exact allocation, how much of each, really depends on your personal situation, your risk tolerance, and your own unique investment timeline. Here's my personal take for what it's worth. These crashes in gold and silver, they're not the end of the story. They're a chapter, maybe even just a paragraph, in a much larger narrative. The bigger story, the one about global debt, currency instability, geopolitical tensions, and persistent economic uncertainty, that story hasn't changed. And as long as that story continues to unfold, gold and silver will almost certainly have a role to play. So maybe the real title of this video should have been Crash Alert. Why gold and silver just plunged, and why that might not matter. Because in the end, the metals will still be here. Empires will rise and fall. Currencies will come and go. But gold and silver? They've outlasted every empire, every currency, and every economic crisis for 5,000 years. So take a deep breath. Don't panic. Do your research. Think long term. And always remember that in markets, the crowd is often wrong at the extremes. When everyone's desperately selling, that's often when you should be thinking about buying. And when everyone's excitedly buying, that's when you should probably be a little more cautious. What do you think? Are gold and silver dead as investments? Or is this just another temporary dip in a much longer-term trend? Drop your thoughts in the comments below. I genuinely read them, and I love hearing all your different perspectives. And if you found this video helpful, do me a huge favor and hit that subscribe button. We dive deep into financial topics that actually matter, without the hype and without the fluff. Just real analysis that helps you make better decisions. Until next time, stay curious, stay informed, and remember, in the world of investing, patience usually beats panic. See you in the next one.